G'day, Lindsay here from Star Dynamic Property Investments. I wanted to welcome you to our training video. I wanted to sort of run through a bit of a masterclass on the US market, give you a bit of an idea on what the market's like, how to get started, and what sort of opportunities there are and strategies that we use in the market, and how you can develop that yourself. It's fantastic that you're here. I'm really excited and glad that you're actually willing to look outside the square. I think one of the things that I've been saying for quite some time is I think a lot of what we've been taught about real estate investing is not working, is wrong. And I think it's good to be able to explore other opportunities. So what I want to do, I've got some slides. I'll run through those with you. I've got some videos to show you of some properties that we do, some what our clients have been able to do, some of the strategies that we use, and how to get started in the market. So let me jump in. I'll just share my screen, and we'll jump in and get started. There we go. So what I'll do is I'll just put. So hopefully you can see the screen there. So what I'll do is I'll just run through some information here first, just to give you a bit of a background on how things work. What I'll do is I'll just drop myself down in the little corner there. Okay, so first and foremost, I want to strongly urge you to discuss your investment opportunities with your accountant or financial advisor first. Make sure you're completely aware of the implications of global investing, any taxation, asset protection strategies, etc. you need. So I certainly keep my accountant and financial advisors real close. All right, so yeah, just to let you know that. Let's move on. So I guess the question is US property investing for you? Whether you're looking to expand your portfolio, whether you want to add some high cash flow properties to a portfolio you already have, or maybe you're actually just trying to get started in the market and finding that your equity or your funds or something that you have is certainly not working hard enough for you and it's difficult to get started. Either way, if any of these resonate for you, then certainly this training is certainly what you're looking for. All right. So what is this masterclass training all about? There's a number of specific points I want to run through here. And by the end, I want to be able to show you that the US has some great positive cash flow properties that you can add additional income to your current income stream, most for less than a deposit for a property here in Australia or New Zealand. Second thing is I want to go through 3 key principles to ensure that you find solid investments with a great return in the US. Thirdly, what I'm going to do is go through some of the falsehoods, debunk some of the lies that the media feed us about what the right way to invest in property. I want to run through how you make sure you can avoid any of the pitfalls that seem to be rife, unfortunately, in international investing. And fourth, I want to show you some of the options and the strategies that do work in the US market. By the end of the training, what I would hope is that you'll see that investing in the US market can be one of the safest, most secure and highest cash flow investments you can make right now. And that building a passive income you need to support your lifestyle is certainly doable, and it's safe when done correctly. So I guess to start with, who am I? Star Dynamic Property Investments, we're a Melbourne-based real estate investment company, and what we do is we focus on helping Aussies, Kiwis. In fact, we've got a number of European clients now. We help them get into the US market and build wealth through real estate. So some of you may know me already, but for those that you don't, we've been investing here in Australia for quite a number of years, up over 15 years now. Like everyone else, I guess Australia felt safe for us. We invested in student accommodation. We've done townhouse developments, house and land packages, but Australia certainly became more difficult. The funds needed was much harder. A lot of the developments we were doing was getting much more difficult. I saw a massive opportunity in the US market in 2012. So I traveled over, started to learn, invested through trial and error, found some really good mentors in the US, and discovered strategies that work in the marketplace. And over the years, I saw how many investors were struggling with the same issues that I was in the Australian market. So we saw an opportunity then to help and let others learn from my experiences, and to firstly let people know that the US market is certainly an option. And secondly, and probably more importantly, to make sure that everyone, if you're interested in getting involved, how to do it safely. So I guess why you're here watching this training. I mean, maybe you're stuck or uncertain what to do next. Maybe you've been trying to invest in Australia, finding the costs are starting to get very prohibitive. Maybe the banks are saying no, serviceability is out and you can't get any more funds. Maybe you're frustrated. Maybe you work hard, make a good income, but you simply just don't have the time to do all the legwork and the due diligence you need for solid investing. Maybe you're just finding that your money just isn't working hard enough for you. Overwhelmed with where to start. I mean, this certainly the complexity of the markets is massive right now. So, there's so many options out there. People just don't know where to turn. So knowing that you need to invest, but having no idea where to start can be one of the biggest issues. But firstly, I'd like to also say that it's certainly not your fault. With the global marketplace now, the complexity is huge. If you're not already an experienced investor, it can be really tough to get started, particularly here in Australia or New Zealand. And even if you are experienced, looking at the global markets without knowing the three main keys to international investing can be scary. But the good news, there's hope. We certainly can learn what you need to set up a solid portfolio. You certainly can learn to know with certainty what are good deals and how to generate good passive income. You certainly can understand how to get deals to come to you. So it removes a lot of that time and the legwork that you need to do to find them and gets rid of that frustration. You can certainly learn how to set up your own team on the ground and to help you removing that feeling of overwhelm when you don't know where to turn to. So imagine, if you will, that one property in the US is worth around about $10,000 passive cash flow to you each year. Now, this is a rule of thumb, but actually it is around about correct. So, most of the properties we look at will be able to give you, after costs, a net return of about $10,000 a year into your pocket. So what you're looking for then is you want to be able to develop a strategy so that over the next 3 years, you can purchase 5 investment properties. Now, if each one of those properties is giving you that $10,000 cash flow, then that's a $50,000 per year cash flow over and above what you're doing right now. Very handy income to supplement what your family income at the moment. Or in the next 5 years, you want to be able to look to purchase 10 investment properties, each one of those giving you $10,000 cash flow per property. That's $100,000 a year. Now, that certainly is something that can be done, and that's certainly something that can be life-changing. So let me show you how this can be done. So the first key number 1, is knowing where your next best investment is, and it might not be next door. Now, I call this think broader, in as much as, unfortunately, 70% of investors in this country own a property within, sort of 15 kilometers of where they live. So that may be a nice place to live. Where you're living could be fantastic, but it may not be where your best investment is. So why the US market? Well, and I know some people laugh, but it is a politically stable country that welcomes foreign investment. So foreign investors are welcome. If we have the funds, they're more than happy to have us. There's no drawback from investing in there. There's so many growth markets to choose from. You can literally just about invest anywhere in the US you want. You certainly have high quality properties, affordable and cash flow positive. And there's a real boom in the housing market right now. Even since the COVID pandemic, it's actually crazy. The market is really booming. It's very hot. The solid exchange rates right now allow you to profit from the exchange rate as the US dollar starts to strengthen as well. And I know, at the moment we're a bit over 70 cents. Now, it won't last there that long, but certainly at the moment it's a great opportunity to make hay while the sun shines. An overview of the market, I think a lot of it started around the GFC time. Many homeowners were sent into trouble. There was over 24 million homes foreclosed between 2007 and 2010. So the markets rebounded after that, which gave great opportunities. The banks are still working through millions of foreclosures. So there's certainly opportunity in the foreclosure and the pre-foreclosure market. Rental demand is extremely strong at the moment, and we're really seeing some growth in a lot of the areas, and growth is again starting to come back into a lot of the housing markets even post the COVID lockdowns. So it's a great opportunity to take advantage of these growths. So where to invest? Whereabouts in the US? Well, look, literally you could throw a dart at the at the map and pick anywhere you like. The coastal markets tend to be relatively expensive. So areas like Seattle or Los Angeles or San Francisco on the West Coast, or if you're looking at Boston, Washington, New York, Miami on the East Coast, these are fairly expensive markets, generally unaffordable for most investors. Now, not that they're bad markets, they're just unaffordable. Once again, you've got to make sure that the market you're looking at is an affordable market. So many in the Midwest or in the main regions there. Now, I haven't highlighted any of those on the map for any particular reason, but Michigan, Ohio, Illinois, Tennessee, Florida, Texas, Georgia, you name it, any one of those markets are going to have some fantastic areas that you can look at investing, some really great cities. Not talking about regional areas. You want good solid cities with good sized populations to be able to give you the best chance of growth. So when you're looking for an area, there's 5 criteria that we particularly look for. Now, first and foremost is city infrastructure growth. So if the city or the council itself is spending money in those areas, then I like to make sure that we piggyback off that growth. The councils or the cities will know their backyard like the back of their hand. So if they're only going to spend money in areas that are growing. So I like to follow them. They spend, and even the really large companies, Amazon, for instance, is spending big money researching where to put new distribution facilities and so forth. So if they're going to spend millions of dollars doing that research, then I'm going to follow where they're investing. Employment opportunities are the second. With the US being such a highly capitalist society, the job is everything. So you need to make sure that you're finding areas that have got good, solid employment opportunities, because that's where people are going to want to be. Schools and universities are third, and there's 2 reasons for that. One is schools and universities, the education sector is one of the highest employers in the US. But secondly, people like to live near good schools, good universities, because they want to give their kids the best opportunity to then get a good job, back to that employment. Hospitals are another one because people, once again, the medical sector is one of the largest employers in the US, but not only that, people like to live near hospitals and medical centers, so another good one. And the last 2 there on the bottom, crime rate and vacancy rates. Now, these are certainly ones you want to be keeping an eye on and be aware of. What I do tend to find, though, is that crime rate and vacancy rate are generally a symptom of the top 3 missing. So if you find an area that doesn't have a lot of infrastructure growth, there's no employment opportunities, there's not good schools, good universities, then generally you're going to have an area that's got a high crime rate, and generally you're going to have an area that's high vacancy rate. So I certainly suggest to you need to keep an eye out on those. But if you find those top 3 in place, you will probably find that the crime rate will be low and the vacancy rate will be low. You have to understand with crime rate, we are talking about the US, there's over 330 million people. The crime rate in the US is certainly a lot higher than here. What you want to look for is you want to look for areas that have low drug-related and violent-related crimes. So some strategies that work in the market, and the first and foremost, and it's sort of a bread and butter strategy, I guess is what you call it, is you buy and hold. So you're buying a property to hang on to it to earn rental income. Now there's 4 or 5 things that you need to look for if you're going to do this. The first and foremost is you want to have a property that's tenanted. If you're buying a property at what we call market value, you want to make sure that it is cash flowing for you from day one. You don't want to be waiting 2, 3, 4, 6 weeks to get a tenant in place and to get them paying. The second is you want to make sure you're purchasing the property at or below market value. You don't want to be paying too much for these properties. And this is one of the biggest keys when we talk about turnkey real estate. Generally what happens is a lot of those are priced above market value. So you're losing equity before you even start. Thirdly, you want to make sure the property's had a relatively recent renovation. I generally look for properties that have been renovated in the last 6 months. And that way there's 2 things. You're not going to be surprised by maintenance or repairs that are needed. And they're probably going to be a relatively low maintenance property. Make sure it's got all its permits and licenses, whatever's needed for the state or the city. And your rental return at net needs to be really above 10%, because there's so many opportunities that are 10%. I wouldn't be settling for 5 and 6% returns in the US. You're not going to get a lot of that growth, but the rental returns are fantastic. Now, another one that we use a lot, and one of the ones that I like, is what we call the buy, fix, and hold. Now, this is where you are buying a property, doing it up, and then you're able to put a tenant in it and hang on to it. Now, I wouldn't be buying fire damaged or sight unseen properties. I make sure that I walk every single property and I send contractors through the property so we know how much it's going to cost. You need to make sure that your equity gain is at least 20% after the repair. there's quite a bit of work involved in actually doing the renovation. So you want to make sure you're getting good equity gain in that. You also want to be careful not to overcapitalize on the renovations on the property. That can be another important one. We can often spend too much money on renovations to try and try and get extra money out of it, and it doesn't really work that way in the US. The properties are not that expensive. You want to make sure you include all costs for permits and licenses, etc. Again, you want to make sure your rental return is above 10%. And the ability to implement what we call the BRRRR strategy and refinance your funds out with the buy, fix and hold is certainly a fantastic opportunity. The other one is fix and flip. Now, you've probably heard about this if you watch any of the flipping shows and things on television. This certainly does work. You certainly can buy distressed properties. You can do them up and you can sell them. Generally what I look for is I try to buy the property under list price. Now that's a little harder right now with the market so hot, but certainly you can try to do that. Again, I don't buy fire damaged or sight unseen properties. I make sure that my profit target is based on 90% of the market value after repair. So that way I can actually put the property up on the market a little bit under market value, sell it quite cheaply, and get my return. Profit target is a minimum of 20%, and I get a minimum of 3 quotes from the contractors. Now, the types of properties to look for: single family residences are probably the most popular. This is just your standard 3 or 4 bedroom home, 2 bathroom, garage. In the US, a lot of them have basements. These are probably the easiest ones to get. They're easier to manage if you're renting them. They're easy to do up. They're easy to sell as owner-occupier properties. Now, the other option in the US is what they call multifamily residences. Now, we don't see that a lot here in Australia, but these are properties that have 2 units, like maybe an upstairs and a downstairs, in one house. So you can have you can rent out the upstairs separate from the downstairs. And what happens with multifamily is the rental return is certainly larger. So these are fantastic buy and hold or buy, fix and hold properties. Slightly more complex to manage. There's less properties available. The market value of the property is generally a little lower than the single family too. So the single family work best for flips. The multifamily work best for buy and hold or buy, fix and hold. Unit blocks are another fantastic one. Higher returns again, much more complex to manage or to own. But again, you could be now up in into the 15s, 18s, 20. I've seen unit blocks give 23 to 24% rental return. Fantastic when you can get them. And then, as we said, the rehabs themselves, a lot more work to do. And then this is more the rehab strategy is certainly a more active strategy than a passive strategy. So if you stop rehabbing properties, you'll stop earning money. So, maybe you can use this strategy in combination with a couple of the others to be able to build some passive income as well. But the returns are fantastic. Chunk deals are great, and it can give you some high cash flow rentals by rehabbing properties. So, key number 1 is important for you to understand that your best investment market may not be at your doorstep. Now, as I said before, over 2/3 of investors in Australia own a property in the same postcode as the one they live in. So it's critical to understand that where you invest is important, and it may not be nearby. So the US market has some incredible opportunities. It really does for foreign investments. It is safe, it is affordable, and the ability to get high cash flow properties to support your passive lifestyle is fantastic. I have not seen a market like it. So that brings in to the next question: how much would you need to invest? So that's the next logical question. Brings me to key number 2. So the second key that you need to know is investing in affordable property is critical to being able to build large portfolios. So almost 2/3 of all residential investors in this country claimed a loss in 2019 on property. Negatively geared properties hamstring your ability to buy more. So the US market is affordable, absolutely. Less than a quarter of what you might think it would cost. So let's go back to those original strategies, the 3-year plan and the 5-year plan, where in 3 years you can get 5 investment properties giving you $10,000 per property with an investment of $50,000, with a capital return of $50,000 passive. And a 5-year plan, 10 investment properties giving you that $10,000 per property, that's $100,000 a year. These are affordable. In 5 investment properties in the US could cost you less than $300,000 for all 5 properties. The 10 properties would be less than $600,000. And the best thing is you don't even need to have this sort of funds up front. So what we look at is we look at what we call our cash generation strategy. So even if you don't have that sort of cash ready to invest, there are strategies you can use to help return the money. And let me show you this. So first and foremost, what you look to do is you say, right, we get in and do a property flip. So this is that fix and flip. You spend $65,000 on a property, you sell it for $85,000, make a $20,000 return. And then you repeat that process. Get in and do a second, and then you get in and do a third. So in 12 months, you could go in and do 3 property flips, each one earning you $20,000 profit from doing those flips. So then at the end of that period, what you do is you buy yourself a rental property with that profit, giving you that $10,000 a year return, a 20% return on your money in that particular case there. You've still got your $65,000 capital to invest, and you can go out, and then basically what you do at this point in time is you repeat the process again. So you repeat, and then that's the way. In the first year, you can do 2 or 3 flips, buy yourself a rental. Second year, do 2 or 3 flips, buy yourself a rental, and start accumulating properties that way without tying up your capital. The other strategy that I hinted at just before was what they call the BRRRR strategy. Now, this is very popular in the US, but certainly also able to be done by investors here in overseas as well. And that stands for buy, renovate, rent, refinance, and repeat. So essentially what you're doing is the similar to the cash generation strategy, but instead of selling the property, you're refinancing your money back out, and then you're repeating the process. So let me show you what this looks like. So let's do the same property you had before. You buy the property for $50,000, you spend $15,000 on it, so your total cost is $65,000. Now we'll be looking for that property to appraise at around about $90,000, which would be slightly higher than market, and that's generally how the US goes. You'll be able to, the appraised value will be slightly higher than what you'd be able to sell it for on the market. So this one here will say appraises at $90,000. Your rental return is $1,200 a month. So your rental yield is there. You can see the refinance out amount. I'll bring my cursor over here so you can see this. The refinance amount is $58,500 at 65% loan to value ratio. Now, even when you're paying your interest at 7%, which it roughly would be for a foreign investor, that'll be about $4,000 a year. So your net annual return is still going to be $6,000, just a shade under $6,000 a year. So at the end of the first property that you've done, you've got a property, you've got your $58,000 of your 65 back, and you've got a property earning you nearly $6,000 a year. So what you do is you take your 58, you nearly your $60,000, and you go and repeat. So you add another 1,500, make it 60,000, go and buy a slightly cheaper property, slightly less area. This one values at 85. It'll be a bit cheaper rent because it'll be probably a smaller property. Rental yield is there. You can see here that you're going to get $55,000 cash out. Your interest payment is there, so your net annual return on this property is going to be just over $3,000. So your return from 2 properties now is going to be just over $9,000 a year from 2 properties, but only $11,000 left in both deals. Do a third one, even if you add a small extra amount to the funds. Let's say you're at around $10,000, you go and buy yourself a little bit of a better property. Now in this example, 3 in a year gives you an annual net return after costs of around about $16,000 US, with only $13,000 left in the deal. And at the end of this point, after doing 3, you've still got $68,000 to go and buy another one for the following year. So key number 2, affordability is crucial. It enables you to build a portfolio of properties rather than paint yourself into a corner by buying one investment property that you cannot afford and are stuck. The US market is an affordable market. Investments can be made for less than a deposit on a property here in Australia. Now, I use those numbers there specifically. You know, at $65,000 US to buy and renovate a property, that's around about $100,000 Australian dollars or New Zealand dollars at the moment. There's, you know, you would need more than that just as a deposit. So you're thinking now, okay, Lindsay, if looking abroad and there are stable high profit options and they're affordable, how do I learn how to invest safely? Well, that's a great question. And what it does is brings me to key number 3. So key number 3 is you need to follow a proven system. So you need to ensure that you study your chosen market and follow a system to invest. Now, the system that we put together, we call our STAR process. So over years of investing in the US, hundreds of deals, tens of thousands of dollars I've spent in training and learning, I have been able to put together this process that I know works in the US market. Now, the STAR process stands for S for strategy. So you first and foremost, you must clearly map out an investment strategy now, and I can't harp on this enough. The investment strategy is critical to making sure that you are getting the right properties in the right areas. Second, the T is team. When investing, particularly overseas, you need to put together a good, solid team of people on the ground that you can trust. Acquisition, buying the right properties in the right area that matches your strategy at the right prices. Now, most people don't realize your profit or your money that you make is made when you purchase, not when you sell. It's all about correct acquisition is the key. Renovation. So being able to create or manufacture growth in a property by renovation can add thousands to your investments, even if you're planning to hold properties for rental income. Waiting for market growth is not a strategy. That is speculation. That is not investing. Renovation allows you to manufacture the equity, and now the growth in the property is now in your hands. And lastly, it's the realization of your profit through either great selling strategies or tenanting and holding the properties for passive rental returns. Even the ability to refinance and get your equity back out again, the options can be endless. Once again, and I guess I harp on strategy a lot, but the strategy you have to pick determines what your outcome of those properties are going to be. So key number 3 is crucial, because without a proven system and a process to invest, you could simply be purchasing the wrong properties in the wrong areas, which will give you massive headaches, problems, and loss of profits. Following a proven system and using strategies that you know work, building your team on the ground will certainly alleviate most of that worry and concern, and will allow your investments to flourish. So I hope at this point in time now you can see that I've been able to show you that the US market can be one of the safest, most secure, and highest cash flow investments you can rate right now, so that you can build passive income to support your lifestyle. Thinking broader, affordability, and following a proven system are the keys that will be able to get you into the market. So I guess the next question is, what do we do if we get all 3 of these keys together? So let me show you an example right now. And what I'll do is I'll bring up some, this is real examples of properties that we've done recently. And so what I'll do is I'll show you our feasibility first. So this is a property that we did just at the start of this year. We bought the property, we renovated it, we had it finished. We started the renovations in November, just over Christmas, and had it finished in December. So hopefully you can see our screen there. I'll just make it a little bit larger for you. Okay. So this was a 4-bedroom property in an area of Michigan called Harper Woods. We bought it for $30,000. I'll just scroll down here. The rehab, we estimated the rehab cost to be 41, actually cost us 36. So you can see over here, we sold the property for $123,000. We sold it in the first week of March we had the offer come through. So all up, it cost us $80,000. We sold it for 123, net profit of $36,000 US, or a return on investment of about 45%. So what I'll do, I'll just show you really quickly some of the photos on how the renovation worked. So, this property was in relatively good condition outside, needed a fair bit of work inside. So the renovation costs there of $40,000, which we did, was relatively, pretty much what they call a full renovation or full interior rehab. So we did most of everything inside. We even pulled some walls out, and I'll show you the pictures here as they come up. And we'll show you now from exterior. So the external photos here, you can see that's what the picture was when we bought it. Now, interior is this was a little breakfast nook, just vinyl flooring, you can see there. That's the kitchen, very small kitchen. They couldn't even fit their fridge in there, as you can see that, which was crazy. The kitchen itself was very old, very 70s, very dated. That's the kitchen there. That's the bathroom downstairs, bit dated, very tired. One of the bedrooms downstairs. Upstairs, so it had that almost looked like an office ceiling, and the 70s paneling, very dark. That's the bathroom upstairs. Main bedroom upstairs. Downstairs, this is the basement. That was the old furnace they had. We replaced all of that. There's a lot of junk down in the basement here. So when we finished, didn't have to do a lot to the property on the outside. As you can see there, we painted it, cleaned it up, a little bit of gardening and that sort of stuff. But other than that, we didn't have to do a lot. But inside, we certainly did. Clean up all the basement, got rid of all the rubbish down there, as you can see, cleaned the walls up, repainted, get the flooring in. New heater, the furnace there, new hot water service. This is the upstairs. This is the master bedroom. So we opened this out a lot. So they've now got like a parents' retreat reading room as well as the master bedroom. All brand new doors. Got rid of that ceiling. Got rid of all that paneling. All painted. New carpets. New bathroom. Downstairs bedrooms. Polished the floors. Painted the place. Brand new bathroom downstairs. And there's the kitchen and living area now. Got rid of these walls. So we pulled out a wall here. Opened up the kitchen area much more. Tiles on the floor, granite tops in the kitchen, brand new kitchen benches. Much nicer. There it is there. So that's essentially the types of properties that you can put together. It's exactly the situations that that a lot of our clients are doing in the market. These are exactly the areas that they're focusing on. So it does give the opportunity to be able to develop that sort of income, and each one of those flips, you can take those profits, and then of course you can put them into a rental property. So I suppose the next question is, you've got some choices. Now, of course, you don't have to act on any of this, but that will also not get you any closer to your goals. Now, the other option you've got, of course, is you can jump in and try the market yourself, and it may work really well for you. We have a lot of people that I've spoken to that have been doing this in the US for a number of years. But if you'd like some help in designing an investment strategy and some support and assistance to get into the US market, we are happy to help. Reach out to us. We have exclusive online training courses and our Investors Inner Circle support program that can give you the knowledge and the confidence to get you started on your investment journey. It's our supporting you throughout your journey. Alternatively, we have full coaching available to ensure that your journey through wealth in the US property will be as seamless and painless as possible. It's having us in your corner the entire way. Otherwise, if you've got no time to invest, our Platinum Advocate program can do it all for you as well and build you a solid, profitable portfolio. So many of our clients, certainly at different levels of support, are seeing amazing results in the market. A number of them have got multiple properties by now. I'll show you some more quick examples of some properties. These are some more examples of properties that the clients have been able to achieve. The first one there was in Pensacola, Florida. So that was $34,000 US. That was about 3 years ago now, that property, with a cap rate or a rental yield of 14%, $800 a month. The middle one here was in Detroit, Wisconsin Road, $34,500 they paid for that property. Had new rehab done, tenanted, 15.5% rental return. The one here in Milton in Florida was a rehab. So the rehab cost them $12,000, new carpets, paint. They had to fix up some bathroom. The profit on that one there was 32%. Now what I'll do is I'll also show you a quick video of what they look like. Let me bring this up here for you. So this property here is in Westminster Avenue in Warren, in Michigan. This was the property when we bought it. We paid $17,000 for this property for one of our clients. Property was in okay condition outside, needed to do a little bit of work on it, a bit of painting, had to put, you can see the garage there was in pretty poor condition. Interior wise of the property, it needed a complete renovation. So the interior was pretty trashed. You can see there's no kitchen, no bathroom. So it was basically start again from inside. There's the bathroom. There's one of the bedrooms. This was a 2-bedroom property in Warren. So Warren's a very good, solid B-class area. The renovation on this was about $25,000. It's a smaller property, wasn't as big as that other one that we just showed you the photos of in Harper Woods. This property here was about 720 square foot, so about half of the size of the one in Harper Woods. But this one, it was a 2-bedroom, 1-bathroom instead of the 4-2 that the other one was. All new paint to clean up the garage, get it all neat and tidy back again. You can see that we painted the exterior of the property, put a hand railing in on the stairs, and all new interior. So, much better, brand new kitchen, brand new bathrooms, sanded the floors, paint, carpet, blinds, all new fixtures, fittings, brand new kitchen. Everything interior was replaced. New hot water service there, brand new bathroom, tiled on the walls there. The market value of the property was $65,000 when it finished, sold it for $62,500. New carpets in the bedrooms. That's the property. So once again, exactly the sort of properties that you can do, exactly those are the other types of properties that a lot of our clients are being able to achieve, and a lot of the results they're being able to achieve. Even during the COVID lockdowns, the returns some of our clients get are amazing. Katie on the left there has just secured her 3rd property in the last 8 months. Even with the COVID lockdown in between, even managed to get one of them fully renovated. She's just done an amazing job. She's really ripping it up. So what's the next step? So I've freed up some time in my calendar for the next couple of weeks. So there's a button to book a call below the video here. So what I can do is I'd love to go through and help design a strategy for you that will work. Obligation free. We can set out a strategy for you and then explore some options if you want some help or support implementing the strategy. If not, no problem. You've got your strategy, you'll be ready to go. Plus, what we'll do, and again, I guess I'm being a bit of a broken record on strategy. If you book a call and mention this masterclass during the call, I will give you full access to our US Property Investment Strategy course free. So, the strategy course is critical. If you book a call with us, we can sit down, map out a strategy for you, and whether we help you implement or not, if you mention this masterclass, we can give you access to our free US investment strategy course. So look, click the button below, book a call, let's have a chat. Let's get a strategy designed for you that's going to work, and then have a look at some options for you to help implement it. All right. See you guys.